Hey, Joshua Phillips here with Churchill Mortgage coming to you with a special market update. Today is the September the 19th. Of course, yesterday we had the Fed meeting, and the Fed, as I'm sure everybody knows, the Fed cut the Fed fund rate 0.5%. So we were debating, is it going to be a quarter? Is it going to be a half? Well, it was a half, which, sounds like great news, and I think it was. Now, if you have been watching my videos for a while, you already know. You're smart. You already know. Mortgage rates did not suddenly improve 0.5%. The market's been anticipating this, and we've already seen mortgage rates improve 0.5%, maybe even 0.75% over the last 60, 90 days. So this Fed cut is already basically baked into current mortgage rates. Now, we're going to pull up here. What you're looking at here is what's called mortgage-backed securities. This is a mortgage-backed security chart. This is where mortgage rates derive their values. I always like to say that green is good, red is bad, and the higher the security price, the better mortgage rates are doing. Now, yesterday, just for fun, I decided to jump onto Facebook Live right about the time the Fed made their announcement. I'm always very keyed in and watching, and to me as a loan officer, this is like exciting news. It's like the end of a football game where we want to see what the result is and what Fed Chair Powell has to say. And I went Facebook Live. I wanted to see, man, are mortgage rates or mortgage-backed securities going to shoot up? Are they going to shoot down? Like, what's going to happen? It was kind of a dud yesterday. Not much happened in the mortgage-backed security market. We actually were a little bit down yesterday. And how's that? How does mortgage-backed securities get a little bit worse yesterday when we had such a great day with the Fed? Well, again, we've already seen this cut already worked into the market, and while we've had all this improvement the last 90 days. So, and if you look here at the security chart, we've kind of hit this ceiling right now at this certain level, whatever this is, this 10152, and but we do continue to remain above all the moving averages. We talk about, this 25-day, 50-day, etc. We are above all the averages. Our trend is still in place for improving security prices and mortgage rates. Now, so that's what the security prices look like, and good news, but nothing exciting. Today we're up. We're just up and down just a little bit. And let's look here. The company that puts out these MBS Highway puts out which stands for mortgage-backed security. They did a video today and included some charts that I wanted to share with you. Now, here's what the Fed is forecasting. If you look at this chart, basically they're saying, hey, we hope to have another 25 basis point cut in November and December, and then maybe another 100 basis point cut through 2025. They're expecting inflation to continue to come down toward that 2% goal. Unemployment to go up just slightly, but hopefully maintain there. And then 2% GDP. So, overall, they're anticipating things improving. Now, what does that mean for mortgage rates? If everything goes according to this plan, we hopefully will see mortgage rates slowly decline. Now, I don't think we're going to be talking about anything, no way. 2s, 3s, maybe even 4s are out of the question for a while. 5s are should be very, very reasonable. Certainly in the 6s now, should be in the 5s next year. When it comes to purchasing, I think we're in a good season right now, a great season as we're heading into the wintertime. I've been calling this a buyer's market the next several months, and hopefully we'll continue to see. Meaning right now, there's not a lot of home buyers out there, so sellers are dropping their price. They're paying closing costs. I think it's personally, I think it's a great time to be buying a home. As far as refinancing, there's two schools of thought. Hey, if it makes sense, go ahead and do it. We don't know the future. Or you could say, hey, I'm going to be patient and give it a while, and maybe I'll get, be rewarded with a little bit better interest rate as I wait. The thing is, we never know, exactly what's going to happen. I've mentioned a couple instances when, and I think the big one is the election. We don't know who's going to be elected. We don't know how the markets are going to react to that. So, I mean, it's just impossible for anyone to say. I remember November 2015, watching the election results, thinking when Trump got elected, I totally thought, as did most people, that was going to be great for mortgage rates. Unfortunately, shortly after that, mortgage rates shot up. So, I mean, let's just be careful and cautious. And I'm not saying that would happen again if Trump is elected, but I'm just simply saying that we cannot predict what's going to happen. So, from my perspective, I'm thinking in October as far as refinancing. I know I've got a lot of clients receiving an email about refinancing. I think, when we get into October, we should really start taking a serious look, because we don't know what's going to happen with the election. And if we can get you something that makes sense, let's go ahead and lock it in and get you closed. Anyway, well, listen, please feel free to reach out to me. I know this is a little bit longer than usual. Please feel free to reach out to me if you want to discuss your specific situation, or if you want to go ahead and do an application if you haven't. And whether buying or refinancing, it's just a better situation today than it was several months ago. So, hey, let's be happy about that. And hopefully we'll continue to see things continue to slowly get better. Have a great day. Bye.